Guys, I have some big news. Our weekly dividends finally paid us. And if you want to find out just how much they paid me, continue watching. What's going on, guys? Welcome back to another video today. And guys, our group of 4 weekly dividend ETFs paid us this week. In this video, we're going to be discussing what these payments amounted to, and we're also going to discuss the price appreciation of the stock itself. So starting with our first ETF here, guys, we have YMAX. And as we can see here, YMAX actually had a pretty high payment for this week. We can see it was 0.3056 per share, and the ex-dividend date was 11/29, so we just barely made the cutoff day. So for that one share, we got ourselves around 31 cents. And for our second weekly dividend payer, guys, we had YMAG, which is comprised of the Magnificent 7 in the stock market. And as we can see here, guys, they paid us 20 cents per share. Once again, we just barely made that ex-dividend date, but that's pretty huge. 20 cents for a stock that costs around $20 is pretty big. If you guys are enjoying this video so far, make sure to like and subscribe. It really helps out the channel, and I really appreciate it. And that's going to be our last YMAX fund. Now, moving over to the Roundtree funds here, guys, we have RDTE, and RDTE paid me 32 cents for our one share here. Their ex-dividend date was 11/27, so we had plenty of time on that one. And for our last ETF here, guys, we have XDTE, who paid us around 19 cents for our one share. So guys, I'm going to go on ahead and jump over here to our weekly dividend sheet. And if we go to our dividend calendar, we can see that we made $1.06 off of those 4 ETFs. Now, when we jump over here to our main sheet, we can see that our total dollar gain is 29 cents over the past week. So not crazy price appreciation, but sideways trending, which is very important for funds like this. We're not really looking for huge capital appreciation, just as long as we can preserve our initial value and, take advantage of those sweet 30% dividends. And if we look here, we can see that YMAG is our biggest jump. So we have a 47-cent gain on our cost of $20.21. And the thing I will say here, guys, is for YMAG and YMAX, I actually only dumped $20 into the fund. So that gets us more than just that one share. So currently up 2% on that investment. And if we look at YMAX here, we're actually down just a penny. So that's also pretty good. Cost on that one was $20.33. And jumping down to RDTE, our first Roundhill fund here, we can see that we're down almost 1% on this ETF, which has netted us negative 42 cents. So not the worst thing ever. Honestly, guys, if the fund depreciates around 5 to 6%, I think we'll still be in the profit after around 6 or 7 weeks. So that's really not a huge deal. The only thing that makes me a little leery is their price of $45 per share, especially when comparing their dividend payment to YMAG and YMAX. It's not that much more for having high initial capital to get in the investment. And then if we jump down here to XDTE, we can see that they have had around 0.5% gain, netting us 25 cents. So if you want to zoom out and look at it, we can really just say that RDTE canceled out YMAG, and we've just got that around 30 cents profit so far. Now, jumping down further here, I want to take a note of our total yield so far. So based on that initial investment of $139.73, we've made back 0.75% on that initial investment. So you may be looking at that and say, well, that's really small. But again, guys, you have to keep in mind that these are weekly dividends. And if we multiply that by 52, our total yearly yield is going to be around 40% on that total investment. The interesting thing about that, guys, is when we take our total yearly yield and multiply that by our initial cost, we will actually be able to afford one share of XDTE or one share of RDTE or 2 shares of YMAG or 2 shares of YMAX. So that's actually pretty impressive considering this is basically a completely hands-off investment. So while I don't entirely believe that that total yearly yield is going to be around that 40%, if it is, awesome. That's basically the whole point of this experiment, is to see if the net asset value can really trend sideways and they can keep up those massive dividend payments. And right here we have our average yield on the portfolio. And I want to make a very important note here. This is just based off of the current yield. So since RDTE and XDTE don't have a full year in the stock market, their current yield is actually going to be lower than what it should be at the end of the year. If we actually jump over here to Roundhill Investments website, we can see here that on RDTE, their estimated distribution rate is going to be around 37% for a full year. And if we also jump over here to XDTE, we can see that their yearly distribution rate is going to be around 18%. And if we jump down here to XDTE's payment history, we can see that they've had almost a full year in the stock market. Granted, it's only end of March until now, so they're only missing around 3/4 of their percent payout. So I'll be looking forward to see if that distribution rate is actually accurate. Now, the one thing that I haven't really ran into yet is to do with the expense ratio. So as you guys know, XDTE and RDTE have a very high expense ratio, almost 1%. So I don't know if that is taken out of the distribution or if there's like a end of year fee that'll have to be paid. I would assume that it would be taken from the actual distribution. And again, guys, I do want to caution you with this investment. It's important to note here that the fund currently expects but does not guarantee to make distributions on a weekly basis. So at some point they may cut out that weekly distribution altogether, and at that point it kind of becomes a conversation whether it's really worth it to take advantage of that compound growth in a full year. At that point, you may honestly want to just invest in a monthly yielding stock. And I also want to go over, guys, our dividend reinvestment. So we're actually dripping back into all of these stocks with our dividends. So right here, we can see that our 33 cents went right back into YMAX, and we actually received 0.017 shares at an average price of $18.41. Looking retroactively, that's also going to throw off our cost basis a little bit, just because if we experience any price appreciation, our average cost is going to go up, and inversely if the stock goes down. But when dripping back with YMAX, we get that 0.017 shares. And for YMAG, we actually got that 21-cent dividend, and we ended up getting 0.01 shares at an average price of $19.62. Now, if we jump down here to RDTE, we can see that that 33 cents was able to net us 0.007264 shares at an average price of $45.43. And then jumping down here to XDTE, that 19-cent dividend was able to get us 0.003569 shares at an average price of $53.24. Now, ideally, guys, when looking at dividends, they say that the net asset value of a stock is supposed to go down by exactly the amount of that dividend that gets paid out per share. In theory, right, they pay out their dividend, stock price goes down, and then if our dividend reinvestment plan kicks in at the right time, the next day, typically on that Friday there, then we should be able to take advantage of dollar cost averaging into the stock. However, this is just completely speculative. I don't entirely know if that'll be how it works. With a fund like YMAX or YMAG, it's a little bit different. They declare the dividend, and then it actually takes about half a week to process it, so you don't typically get to take advantage of that low price. So I will keep that in mind. And the last thing that I want to note here, guys, is in our yearly dividend income, we can see here that after 1 year at the current average yield, we'll be netting $25.67. Now, while that is a little bit lower than total yield multiplied by 52, that's great in the case that these ETFs like XDTE and RDTE, since they haven't experienced a full year of paying out dividends, if they just all of a sudden have a lot lower than what we're expecting for their current yield, we'll still be netting that $25, which is pretty solid. There's not really any other high dividend yield ETFs that can get you around that 22%, so that's pretty massive. So if you guys enjoyed this video and you want to see more of this series, make sure to like and subscribe, and also let me know what you want to see in the next video down below. As always, guys, I'll see you in the next one.